is. Jared Blikre is at the Wi-Fi Interactive, and we have just seen incredible movements in the market.
We're seeing some more today. And by the way, excellent explanation there, Julie and Brian. And it really gets to not only the movements that we've seen, it's not the absolute level of these bond prices, it is the volatility, and that volatility spills into everything else. Here we have the 13-week T-bill yield. This is down an astonishing 38 basis points. And let me get to a chart here. This is over the last 3 months. Only a few days ago, we were right back up here pricing in 50 basis points, maybe a hike next week for the Federal Reserve. Now we are pricing in potentially no hike whatsoever. That's how quickly things can change overnight. By the way, this little red dot right down here, this is today, this is yesterday, and that's how much this has moved. We haven't seen moves like this, especially in the 10-year, since right after the Lehman Brothers collapse in 2008. That would be September of that year. Only 3 days ago, Thursday close or Wednesday close, we were sitting at about 4.0% in the 10-year. Now we are down 3.45%. That is down over half a percentage point. Again, we don't see these moves very often, and I want to stress the volatility and what that does to the risk markets here. Here's the ICE B of A move index. That has been creeping up here, and now it looks like it's set to explode to the upside. Here is a 5-year chart. Here is a pandemic high that we saw when we suddenly closed off the world economy overnight. Well, we're heading back up to these levels. All of this tells me that there's a lot of skittishness in the market, and when we see all this volatility, it reduces the available credit, it reduces available investment for everything else. That includes stocks, bonds, crypto, everything. Here's the US dollar index. Here's one sigh of relief. Perhaps we're not seeing a rush into the dollar. The dollar is a safe haven asset, but we are seeing a move into the yen. Here we're seeing the euro versus the Japanese yen, investors going into the more safe haven asset of the yen. That's what happens historically during these movements. Now, I want to show you what's happening to the regional banks. This is over the last 2 days. Some of these moves absolutely astonishing to see on a 2-day basis. A lot of these plays relatively stable stocks here. They don't move that much per day, and yet we're seeing moves of 50%, and that's not even including what's happening overnight. Some of these stocks now, WAL, FRC down another 60-70% overnight, guys.
Yeah, I'm looking at First Republic here too, Jared, down 63% here in the pre-market. Some very, very wild moves.